Welcome and good morning. My name is Colton Esser, and I'm the Manager of Strategy and Research here at TEC Canada, and I will be your host for today's event. Thank you for taking the time to join us for our Winter 2025 Anderson Economic Update. Today's event is an exclusive one, available to members only, and it's great to see such an awesome turnout of both members and chairs. So let's get to it. We're here to discuss a topic that's relevant to all of us, now more than ever. And that's the economic landscape for Q1 2025 and beyond. And of course, the associated important topics that impact your business. And within that discussion lies the TEC Canada CEO Confidence Index for Q1 2025, which of course is a quarterly survey measuring the confidence of Canadian business leaders of small to medium enterprises. The survey was conducted from November 21st, 2024 to January 5th, 2025, and we're very pleased to share that we continue to have around 25% participation in the survey, making it one of the largest and timeliest economic surveys in Canada. And to support your conversations, we have included the most recent CEO Confidence Index and the latest Anderson report in the chart area. You're welcome to download the reports and share them with your teams. Now, as we go through today's session, if you have any questions, please place them in the Q&A or the chat. If there's anything that we don't get to during the time allotted, we'll get Dr. Anderson's answers afterward and follow up with you offline. So now let me tell you about the man who reviews the data, provides the insights, and helps us index that information with past CEO confidence reports. He also delivers our Anderson Economic Report every month, which is available to members online at tec-canada.com or through the TEC Canada app. So, Dr. Peter Anderson, he is an independent consulting economist specializing in economic forecasting. He obtained his doctorate in economics from Harvard University. Early in his career, he was the assistant chief of the Bank of Canada's research department, where he advised the governor and the Bank of Canada on economic conditions and the economic outlook. Dr. Anderson also spent several years with many major Bay Street investment dealer firms before founding Anderson Economic Research Inc. He acts as a filter, separating the signals from the noise in order to provide clients with the useful information that they really need. So without further ado, I'm pleased to introduce Dr. Peter Anderson. Welcome, Peter, and thank you so much for joining us today.
Colton, it's great to see everybody. Hello, my friends. I can't believe what's going on. History is being made. These certainly are interesting times. And we all want to look ahead. I'm going to try and do that with you today. I want to say, though, at the outset, how valuable this TEC CEO survey is. You know, it really is one of a kind. We don't really have surveys that are anywhere close to giving this kind of information on Canada's economy. The small and medium-sized business community in Canada accounts for basically 50% of gross domestic product. And the answers that we are getting to our survey are so up to date. As Colton mentioned, the survey was done after November the 5th. In fact, several weeks after November the 5th. So basically, this is real-time information. So just imagine that you've gone to a tech conference and you are able to speak to a couple hundred people at the hospitality sessions at that conference, and you've asked them a number of questions, and you've been able to put it all together and filter it into your strategy in terms of how you are going to react, the things you will do today, and the things that you might do tomorrow. So, Colton, it's a lot of fun to look at a survey like this. And, you know, it's a dynamic flow of thoughts. Our surveys are done every 3 months, and we can see the trends that are developing. Now, of course, what we have, the 800-pound gorilla in the United States economy has gone into, what can I say, drama mode, shockwave mode since the November elections. And of course, yesterday was the big day. We saw and heard all about these executive orders that were being signed right on day one by now President Trump. So there's a lot to talk about, Colton. I've got a short list of about 5 things that I think came out of our survey, and we can go through them one by one and kind of put things in perspective. Having said that, everyone, I really appreciate your time. I know we're all busy people. And so for you to spend, a good part of an hour with me, it's a great honor to talk to you. And I just want to say, if you have any thoughts, I'm not going to be able to cover everything. I'm not going to get into some of the details. I'm not going to be able to dig down deep enough for some of you. So please jump onto the chat box and let Colton know what some of your thoughts and questions are and things that you would like me to expand on or things that you would like me to guess about as well. Because to some extent, we're all guessing. Economic models are based on past history. Economic models are based on the cause and effect relationships of the last decades, 30 or 40 or 50 years. And what we are seeing now in Washington is really unprecedented. And there is so much in the way of opinion and biased opinions. I really want to get down to the real deal and to try and, get really down to the core message for you. So that's what we'll do today, Colton. That's my objective. How does that sound?
Sounds fantastic, Dr. Anderson. Thank you for framing our conversation today, giving an intro into the survey and, the process that goes into that. And of course, we couldn't do without our tech members. So for those on the line today, thank you for participating in that survey. But without further ado, let's jump into some of that. Dr. Anderson, I think you have some slides that you wanted to share that'll help kind of lay the foundation of what we want to talk about.
Let's do that. Let's jump into the slides, and that will give you, they're easy to look at. I don't have too many of them. I'm not like your uncle who is showing you the slide tray of his trip to Europe. That's all happened to us on occasion. So I've only got a few slides. So anyway, it's a bit of an update looking at the macro economy and the things that we have really on the plate right now, things that are on the table. So let's take a look at the slides. Thank you. Okay, here's the title slide. And I always want to have kind of a thought or a comment on that title slide. I kind of want to try and summarize things. And so here we are. There is both good news and there's both bad news. And I'm dealing not really from an opinion-based approach. I'm based really on the basics, on the underlying data and what the data are telling us about the economy that you are operating in. So let me deal with and we'll stay on this slide for just a minute or so. The good news is that the word is momentum. Momentum, everyone. It's there. The United States really has it. The United States economy has been growing at a 3% annualized rate for the last 9 months, going into the beginning of this year. Okay. And so basically the way it should work, and I think the way it will work, if there's no recession in the United States, there's no recession in Canada. Okay, that's the good news. The US economy has momentum. A 3% growth rate is over the top. It's higher than the speed limit. The speed limit is the rate of supply potential, and that's somewhere close to 2%, but below 2% probably. So the US economy is doing fine. There's a positive feedback mechanism here. Good news is feeding on itself. Growth is creating more growth in the United States. So that's what the indicators are telling us for the US economy. 3% growth continuing right into the end of the year, spilling over into this year. Now, Canada has some momentum as well. We had what can I say, a barn burner of an employment report for the month of December. We had 91,000 jobs created in just 1 month. Between November and December, 91,000. Now, that's just a number, but what does it mean? Well, the thinking, the consensus expectation was that we would have something like 20,000 jobs created between November and December. We had 91,000. And that's seasonally adjusted, trying to incorporate seasonal impacts. So there is momentum in Canada as well. So that is the good news. And so what I'm saying is that I know we are all worried about tariffs. We're all worried about a tariff shock on Canada's economy. But what I'm saying is that with this kind of momentum underway in both countries, we can certainly get through the first 90 days of 2025. The worries that I have are really for Q2 and Q3 of this year. And I'm talking Canada. I'm not talking the United States. I was on a call the other day, and I made the point that in my estimation, there is a 0 probability of a recession in the United States this year. And normally, that would say the same thing for Canada. However, these are different times. But we have only seen Canada have a recession without the US having one. We have to go back. We have to go way back into the 1950s when we used to have made in Canada recessions. So the word, everyone, is momentum. There is momentum underway. And we don't have, I don't think, an imminent call. Again, the bad news, however, is when will we get a tariff deal with the United States? And initially, I thought we would get a tariff deal pretty fast because Prime Minister Trudeau was on the phone almost immediately after that 25% tariff was mentioned. And then very quickly, he was down in Florida having dinner with President-elect Trump. And I thought, oh, this is great news. This is great news. We're going to be able to get a carve out for Canada because there will be a deal on energy and autos before you know it. And that's all a no-brainer. And after all, the problem's not that serious. We're talking about border security and we're talking about drugs. What's there to disagree with on those things? I thought, okay, we'll get a deal. Now, what's happened in Ottawa, it's confusing and there's turmoil and time is involved. It seems to me that we will not have a government in place that can negotiate a tariff deal really for some time. You tell me the time. I really don't know. I'm thinking we're talking about April, May, something like that. And then what kind of timeline for the negotiations? So that's my worry. And the big worry that I have, everyone, is that we can have retaliation in Canada against the United States. And if we would do that, that would make the economic shock even greater. So anyway, let's get into the slides now and take a look at the first slide that I've got.
Sure. And Dr. Anderson, I just want to ask you a quick question.
Yeah, thanks, Colton. I'm glad that you jumped in because I kind of like this to be like a podcast. You know, like you are Joe Rogan and I am somebody else who's on Joe's show, you know, right.
Well, I would just say, just to take a second on one of the comments you made there about the underlying momentum, or at least the positive indicator we're seeing with Canada with that remarkable job growth in December. Do you have any insight into what might have been driving that? Is there something industry specific, sector specific, or is it an indication of something else more systemic?
Well, Colton, the job numbers in Canada have been bouncing around a lot, and it's been difficult to figure out the underlying trend. We've had labor work stoppages, we've had wildfires, and all of those things have disrupted normal business activity. But the good news, Colton, is this December number looks to be the real deal. It is widespread. It is widespread across the country. It is widespread across industries, and it's widespread across the makeup of Canada's population. So it is looked upon as being really an eye opener. It's a jaw dropper. It really is. 91,000. One of the rules of thumb is if you want to compare Canada with the United States, you multiply the Canadian number by 10 to get it on a comparable US basis. So if you took 91,000 and multiplied it by 10, you get 900,000 jobs created on a US equivalent basis. And the US number for December was also good, better than expected, but it was 250,000. 250,000 jobs approximately in the United States, new jobs in 1 month. But if you do the 10-to-1 ratio, 91,000 for Canada translates on a comparable basis to over 900,000 if you multiply by 10. So anyway, it was really a good news because it means two things. It means that companies were doing the hiring, and it also means that people were getting the jobs. So first of all, it means that business confidence isn't as bad as we had thought. And it means that people are getting jobs, so they're more willing to spend. And spending creates even more jobs and stabilizes things. So there's a feedback mechanism here that employment growth creates more employment growth, and it gives momentum.
Yeah, well, it's a very striking, very striking observation, especially in contrast to some of the top of mind concerns with the tariff announcements happening in November. So yeah, thank you for shedding some more light on that, Dr. Anderson.
Well, one of the issues was manufacturing. If there is to be any weakness found, it's found in Canadian manufacturing because manufacturing shipments have been trending downwards, and also the job numbers for manufacturing aren't that great. So that's the difference. That is the carve out. Canada's manufacturing sector is in trouble, and that's where tariffs will hit. It will hit Canadian manufacturing. So manufacturers have a high focus on their U.S. sales, their U.S. market, and that's where the tariffs will cause even more problems, would be in U.S. manufacturing. And our survey does have a fair number of a good representation of manufacturers in our responses.
Yes, exactly. I'm sure there's lots of good points that we're going to dig in as this conversation develops.
Well, this Canadian dollar is helping manufacturing to some extent, but it's good news and bad news. Let me put it this way. Take a look at the Canadian dollar here. Left-hand side of the diagram, back 4 years ago, we were 82 cents. You can see that.
Wow.
And now we're under 70. Okay. Now, if you are getting paid in US dollars, if you are a Canadian manufacturing company and you get paid in US dollars, okay, you're doing well, because for that $1 of business, it's now translating. Let's say that, you put your selling price, your selling product into the United States, and you're pricing your product in US dollar terms. And that $1 of sales, it's giving you $1.44 Canadian right now. Well, that's a lot better than $1.25 Canadian 4 years ago, right? So, yeah, so the Canadian dollar is helping some people. And where will the Canadian dollar go? It might have to go even lower in order to offset the tariff shock on Canadian manufacturers that sell into the United States. They face competition from US suppliers in the US market. And if all of a sudden their widgets are now 25% more expensive because of US tariffs on their widgets, well, maybe we need to see a Canadian dollar, a US dollar that gives $1.50 Canadian. And what kind of, so that is kind of an offset. This Canadian dollar movement is providing some offset, some help to Canadian manufacturers, but maybe they need even more. But let's go to the other side of the story. Let's go to those Canadian manufacturers that buy imports from the United States. Okay, for that $1 of imports, now they have to pay $1.44 Canadian, whereas before they'd only have to pay $1.25 Canadian. So there you have it. It's a double-edged sword, Clayton. I'm sorry, Colton. It's a double-edged sword, Colton. And exporters are benefiting from the Canadian dollar, but the cost of imports is causing a real problem. A lot of companies don't export and they just get product coming in. So it's a good news, bad news story. Now, what I would say is that next week and Wednesday, I think it's Wednesday the 29th, right? Have I got that right on my calendar? I think it's Wednesday the 29th. Both the Bank of Canada and the Federal Reserve make their interest rate decisions.
Yeah.
On that the same day. Now, the chances are, everyone, that the Federal Reserve holds. It doesn't lower rates because the economy is so strong. 3% economic growth in the US. Why lower rates and put more stimulus into the system? And inflation is edging up a little bit in the United States. So I'm guessing the Fed holds, does not move on rates, but we get another interest rate cut. 25 points. I would like to see 50. I think we need 50. And what would that do to the Canadian dollar? Interest rate differentials mean a lot for the C dollar. If the differential is moving unfavorably towards Canada, if US rates look better than our rates, if we're cutting and the Americans aren't, that means a lower lower Canadian dollar. So there you go.
So what's the role of, or when you plot this on the context of the tariffs that might be emerging, what does the dynamic look like, Dr. Anderson? Does that change the story? Does it offset? What's sort of the outlook?
Well, what you can see in this diagram, Colton, imagine the month of October and the month of November, and you can see what has happened since the beginning of November. What I've done here is I am showing you the monthly average for all the data points in this chart, with the exception of the very last data point. That is the last reading that we have for the month of January. I wanted to bring it up to date. I didn't want to give you the average for the first 21 days. I wanted to give you today's average. So there you go. I mean, I think that February the 1st is going to be a very important day for us.
Yes.
Because did you notice yesterday that when tariffs were mentioned, Canada was mentioned in an aggressive way by President Trump, but we didn't hear or we didn't see him sign an executive order putting on a 25% tariff as of yesterday and as of now. So it looks like there's negotiating room. And Danielle Smith she didn't actually get into the Capitol Rotunda for the event yesterday, but she was there, and she was there as well in that side area where they had other people. So it could be that Canada gets a carve out on the tariffs for oil.
Yeah. Now, Dr. Anderson, really, okay. So for oil specific, I was going to ask you. I know, I acknowledge you're not necessarily a political analyst, but if you could take a stab at what the reasons why Trump might give that little bit of negotiating room. What do you think are his incentives for that? His motives behind potentially wanting to bargain with the Canadians?
Well, I'll tell you, it was simple. I don't know. Did I ever mention to you that I've got a Mustang GT?
I don't think you have.
Yeah. It's a red. How about that? Your economist drives a red Mustang GT. I filled it up 2 days ago. I paid $2.84 a gallon. Okay. Donald Trump doesn't want gasoline prices to go up. He wants lower gasoline prices. And we have refineries in the United States. We have them in the Rocky Mountain region. We have them in the Midwest, and we have them in the Gulf Coast region. They all need heavy oil. Oil that the Americans produce, it's shale oil, and it's light. It's too light for many refineries. The refineries are set up, so many of them, for Canadian heavy oil. They really need it. And the last thing that Donald Trump wants is to have higher gasoline prices, especially as the Memorial Day weekend starts and the seasonal on gasoline always jumps. So he doesn't want to see $4 gasoline prices again. He wants to see the national average, which is currently just over $3 US for a gallon. He wants to see it down by not just a couple of cents, but down by a noticeable amount.
Yeah.
He's on the line for that. He keeps promising things will be better, things will be cheaper. And the number one way to do that is to make energy. And energy means diesel and gasoline. And he's right, because diesel, for example, is such a key cost component for so many other things. Building materials, food, you name it. Diesel is such a critical cost element for so much of that kind of product. Yeah. So I would say that let's see what happens. We didn't see that much discussed about tariffs and about Canada yesterday in all of the speaking that took place.
Yeah. Excellent. Thanks, Dr. Anderson.
Yeah, let's take a look at the next slide. And again, not too many, but this is my worry. We didn't get a tariff deal right away. And I guess I was unreasonable thinking that there would be one because it's a kind of a political game here. And I think that President Trump just wanted to string out the kind of the pressure on Mexico and Canada. But I'm worried that in terms of what's going on in Ottawa, the fact that Parliament is prorogued, the fact that we have a leadership process underway for the Liberal Party, the fact that we might have an election, and we don't know if there would be one, but if there is a no confidence vote, the story goes on. When are we going to get a real focus of attention on doing a tariff deal? And I have to mention to you that nationalism is playing a role here. Of course it is. The nationalistic Canadian response has to be to, fight back at the Americans. And it's a very nationalistic program in the United States. It's America first. And, is that what would Dale Carnegie say about getting a deal done? You're not supposed to be arguing with each other. You're supposed to be kind of getting common ground and seeing how you can help each other. So anyway, I'm worried that we could see a 25% tariff on Canada going into the middle of the year. And that's where I'm concerned for everybody on the line. I'm concerned about the economy in Canada in Q2 and Q3. And I'm worried about a possible stall out. Okay, I'm not going to use the R word, but I'm talking about a possible stall out. And I'm talking about, the need to play defense. Need to play defense and to reduce overheads. And how do you reduce overheads? So we can get into that a little bit more. But anyway, I'm saying there's a confidence shock still perhaps yet to come for all of us in the small and medium-sized business community. But let me just say this about the commentary. Some of the commentary on President Trump is that it's a business-friendly approach as well as being nationalistic, that it's business-friendly. Red tape, regulations. Colton, do you think that some of that sentiment could spill over into Canada? That the business-friendly American approach could maybe come across the border and influence Canadian politicians into a more business-friendly approach? I don't know. We'll see. I'm not a political analyst. I don't know who is going to be the Prime Minister of Canada in June.
Yeah.
And if the Prime Minister of Canada in June decides that, a business-friendly approach is not a bad idea, well, maybe that is a new kind of element to business strategy as well.
Yeah. Yeah, that's an interesting piece to keep in mind as we head into that spring, potential election season and see how that plays out.
Anyway, all I'm saying is that we probably have to think about playing defense. It's not an immediate issue. Momentum is still there. We'll be okay for the next 90 days. But as far as business planning, I think that the hiring and investment plans, I think that it's a good idea to put them on hold, not necessarily cancel, but wait and see. And I think that there's going to be a priority on cost cutting and efficiency. Because if we have tariffs of any sort in the sales to the United States, it means that we have to deal with U.S. competition. And that means cost cutting and efficiency. And I'm keeping my fingers crossed on Canadian oil. Donald Trump needs Danielle Smith, and he needs oil from Alberta.
Yeah, well, Dr. Anderson, with that, we actually have a question that did come through just on that note, that if there is a carve-out for Alberta oil, but all else is tariffed, do you think the Canadian government can retaliate with an export tax on oil to the USA? So is that going to be a potential strategy? Is that a situation of, don't pick the hornet's nests? What do you see the risks with that?
Well, I think that delays the deal. I think that the retaliation talk, and I know that pretty well all of Canada, with the exception of Alberta, seems to be in favor of taking a hardline position. And I think that the hardline position in Canada is made all the more hardline by the fact that we are facing leadership competition. And we are probably seeing electoral competition too, if there is an election before October. So I think that would be disruptive.
Yeah.
If that were to happen. Why get in the fight with somebody bigger than you? I would, it's like I said, I wish I'd read Dale Carnegie when I was in my 20s or 30s. I didn't read him until a couple of years ago. How do you get along with people? Well, you don't argue with them.
That's right.
If they've got their minds made up, you're not going to change it. So,
Yep.
Do your best to give common ground and things that benefit you both.
Yep. Agreed.
Anyway, let's go on to the next slide. That was a good question, and thanks. I don't have good answers for everything. That's the best I could do. So here we go. Bank of Canada. I think we need a lot more in the way of interest rate cuts. I'm going to go out on a limb, everyone, and say that next Wednesday, I think that the Bank of Canada should, and therefore might, cut by another 50 basis points.
Wow.
And it's interesting, everyone. We got a really strong response from you, the people on the line, okay? 84% of our responses said that the Bank of Canada rate cuts, and they've gone from 5% to 3.25%, they haven't worked.
Wow.
No effect. No meaningful effect. Okay. And a very high percentage of our members say that rate cuts can take at least 3 months, but much longer as well before they have an effect. But 84%, I mean, that really blows the doors off when you see so many of our members say, hey, rate cuts up to now, give me a break. They haven't done a thing.
Mm-hmm.
So I think that the Bank of Canada has to get interest rates down by at least another 100 basis points this year. That would mean going from 3.25% right now down to 2.25. And if there is retaliation in Canada, okay, if there is retaliation, I think what that means is that the trade war gets worse and the Bank of Canada is delayed in doing what it should do with rates. So I'm saying that no retaliation to me means the Bank of Canada continues to cut. I think that if the provinces and Ottawa decide to put tariffs on the US, I'm saying that, okay, we can't do it. The Canadian dollar would go into crisis mode. And, who wants the Canadian dollar to be at an all-time, never seen before weakness level? So,
Yeah. Yeah. Well, and another question coming through here, Dr. Anderson. To the comment, we're seeing TEC members are saying that, it actually takes a bit of time. There's a delayed effect of the interest rate cuts. What do you see as being the time frame in which interest rates actually have an effect and will actually start making some meaningful change on the Canadian economy?
right. Well, one of the things is that we are so seasonal in Canada. The Americans don't have that seasonality because a few hundred miles south of the Canadian border, the U.S. economy is not in the kind of winter situation that we have in Canada.
Right.
So one of my longtime areas of consulting focus has been in home building.
Mm.
And the spring is the make it or break it time of year for Canadian home builders. And I have to tell you that as far as ownership housing, single family ownership housing, as far as that is concerned, it's crisis territory right now. It is so bad in Southern Ontario, and it's so bad in British Columbia that it's worse than people can ever remember. Even people who can think back to the 1990s when we were in crisis mode, it's even worse than that. So we do have pockets of performance in Canada's home building, pockets of performance in the Atlantic provinces and also in Alberta, but Ontario and BC are in deep trouble. And the thing is, Colton, that when you get a problem like that, you never know where it's going to stop. Does it get into the banking system? do bankruptcies and loan defaults coming out of the housing sector, do they get into the banking system? And then it spreads, because when the banks start to lose money on bad loans and defaults, they put the squeeze on everybody else. Doesn't matter. You throw the baby out with the bathwater. So all of a sudden you get tighter and tighter lending conditions, even though interest rates are low. Doesn't matter. If you can't get a loan, if credit standards tighten so much. So all I'm saying is that if I were the Bank of Canada, it's now the 21st of June. The spring selling season starts in parts of southern Ontario before the end of February. Okay, and it runs through the first couple of months of the year. And then by the time you get to the 24th of May, it's basically over. And the summer, it's not a good time to buy or sell a house in the summer, and the fall selling season is just a pale imitation of the spring. So it's important to get those rates down right now, so they will have a sudden impact on the housing market and help the affordability. But what I'm hoping, Colton, is that for Canada's home builders, they will tell you en masse, regulations are a huge part of the affordability problem, a huge part. It will take over a year to get approval for some housing projects.
Wow.
Whereas in the United States, it's much faster, and they're going to make it faster still in the United States. And the problem is that it's the speed of approvals, And let's hope that somehow you can speed that up. Not easy, though. So much of these regulations are, they're there for a reason. They're environmental regulations and so on. Let's just hope we can speed up the approval process in Canada as well. And that would lower the cost of building a home, that you can build a home that much quicker. So anyway, here we go. The Bank of Canada has its work cut out for it, everybody. And I'm thinking that we will see a lot of rate cutting in Canada. It's going to help with respect to U.S. tariffs. We'll see probably tariffs in place for longer than we want. And, it'll also give Canadian exporters their opportunity to cut U.S. prices if that Canadian dollar goes down even more. So it's already down 16%. That's not enough to cover the 25% tariff. And it's over the last 4 years, but it's going to go down some more. So anyway, next slide. And we're getting close to the end, everyone. Here is the momentum word for Canada. Full-time jobs. Take a look. Full-time jobs on the left-hand side. So employment creates more spending, and more spending creates more employment. You've got that kind of multiplier feedback. And I wanted to put Alberta in, Colton. That's for you, and that's for our Alberta members. Take a look at what's gone on in the last couple of months and how that is a breakout on where we were through most of 2024, through the first half anyway. Anyway, that's my story in terms of the slides.
Excellent. Now, Dr. Anderson, do you see that pattern? Obviously you have Alberta featured here, and it's looking, like a good trend is occurring. Do you see that repeated in many of our major provinces, or are some areas underperforming?
Well, like I said, it is nicely widespread across the country. But it is in service areas, like it's in health services. We don't have construction doing what it should be doing. We don't have manufacturing doing what it should be doing. And we're seeing a lot of public sector help here as well. The full-time employment increases, we're seeing a lot in education and social services and health and so on. So that is the area that we really are not in in terms of
Mhm.
our tech membership. We are kind of in more in the private sector than the public sector. And it's the public sector that's been pulling its weight.
Yeah.
If it hadn't been for the public sector, Canada's economy would be not a stall out, but really underperforming in terms of the economy and its growth.
Yeah,
And
that's an interesting point, Dr. Anderson. So let's just say, we have this, a very high likelihood of a pending election. And with that could come some policy shifts and especially some spending shifts and changes. So if we were to see a government come in with less governmental spending, what will that reveal or do to the Canadian economy if we see that, maybe that public sector growth really taper off or plateau?
well, that's right. And I think that is where we are. And again, I'm not a political analyst, but I do know that the poll results in Canada do suggest a change in government focus. If not in government leadership, well, then government focus. Um, Mark Carney looks as if he is going to be the next leader for the Liberal Party. I did spend a good part of my career at the Bank of Canada, and I have met Mark Carney personally. And I don't know how this is going to play out. I really can't tell you. When I talk to my brothers in Canada, I talk to my family in Canada. I get very mixed opinions, really, on how they feel about politics.
Yeah.
And so I'm the last one. I'm just reluctant to get into the fight, more or less, as to who should win and who would be the best. But I know that Polyev is a little bit like Donald Trump, it sounds. So, we shall see whether that helps him get along with Donald Trump or whether that means he's more inclined to, kind of not get along with Trump. I'm not sure, but I think it's going to be important. The leadership in Canada has got a real role to play because the private sector needs more help. We need a more business friendly approach in Canada.
Yeah.
And one of the things that came through in our survey, loud and clear, our members since November 5th, and our survey was done from the 21st of November to the 5th of January. I can't believe how many of our members think that the outlook is worse now than a year ago.
Interesting.
Yes, 84. The outlook for the economy, 42% of our members right now say that the outlook is worsened, since the election. And 29% 3 months earlier said the outlook was worse. So the number of our members, almost a majority of our members now say that the outlook is worse for the economy over the next 12 months. And 3 months ago, it was about 30%, 29 said the outlook is worse. So it's gone from 29 to 42. So our members are really concerned about the economy. And they are concerned about their own business too. Let me just give you kind of here we go. I've got some notes here, as you can expect. So the majority of our members, Paul, 50%. Well, I guess that's not really the majority. It's 51 would be the majority. For 50% of our responses say that their company's revenues. And when we pose that question, we were careful to say, what do you mean by revenues? We were saying price adjusted revenues, price adjusted constant dollar revenues. In other words, volume type revenues. 50% said they will be the same or they will decline over the next 12 months. Now, if you say the same, to me, that's a stall out. Isn't that kind of a similar word? It's going to be my revenues will be the same after taking into account prices. my revenues will be the same. I think that's the same as saying my revenues will stall out. So 50% saying we're going to have either a stall out or a decline. And the story is really interesting regionally. In BC, 63% of our members in BC say that their company revenues, adjusted for prices, will be the same. In other words, stall out or decline, 63%. So that's a real warning sign here.
Yeah, no kidding. And so, Dr. Anderson, how do you reconcile that sentiment and that decreasing confidence with some of the relatively positive business factors that we may have seen? I mean, maybe there's a timing aspect with the survey running over, the election and then into when Donald Trump first made his statements about tariffs. Could that be overinflating it, or what's your thoughts?
Well, there is some regional variation here in what I just said. The outlook is much better in Quebec. Only, less than, it's in the 30% range. It's basically only a third basically of our members in Quebec, 1 out of 3, think there'll be a stall out or a decline.
Mm-hmm.
So that's a big difference between Quebec and British Columbia.
Interesting.
And I guess in terms of, one of the issues that we have with tariffs coming on, there's a real pressure to be competitive.
Yeah.
And how do you be competitive? Well, one of the safety valves is productivity.
Mm.
One of the safety valves is productivity. But unfortunately, Colton, the Canadian economy hasn't done well at all with productivity growth over really a long period of time, more than 5 years. It's got to be almost 10 years. Our productivity performance has really fallen short. And I guess on the productivity issue, I just wanted to mention this because I think it's really important. In terms of our members who say that productivity has worked, only 8% in our survey say that there has been a significant improvement in their company's productivity. Only 8% say that it's been significant. Now, if you ask them, Colton, are they focusing on productivity? You'll get a high percentage saying, oh, yes, of course, yes, productivity is a high priority for us. But the members that say it's made a big difference, only 8% say that.
Yeah.
So there's this problem because our members still think they can pass on costs to their customers. And that's something that I worry about. Maybe there's some, I guess, misjudgment here because 2/3 of our members think that they can pass on increased costs to their customers. And by increased costs, I mean wage costs. Most of our members think that wage costs, and that's total compensation,
Right.
are going to go up by 4% to 5%.
Yep.
And there's even a sizable number that think it'll be more than 5% increase in compensation. But that's kind of the story. Most of our members, it centers in that, hey, we basically think our compensation costs will go up by 4% to 5%. And then 2/3 of our members say, yeah, we can pass this on to our customers.
Mm-hmm.
Now, there's a bit of a warning here because our survey is saying that it's not as easy as it used to be. And that's an important message, Paul. Yeah, we have almost half of our surveyed members say that, yeah, we can do it, but it's not as easy as before. So if this tariff shock causes the economy to really, kind of get disruptive, it's
Yep.
going to be harder still to pass on these costs. So if this resistance to passing on costs, if this resistance gets more resistant, then it means, hey, profit margins and cash. Cash. I've had a number of my own clients, owners and CEOs who've said, hey, cash is going to be king. I'm really going to focus on cash and liquidity. And I'm going to make sure that I'm okay cash-wise. So that, I think, is something that is new in our survey, that cash and liquidity is really important. And BC and Ontario definitely are telling us that there's a bit of a cash squeeze going on,
Yeah.
especially BC. We have, what I do sometimes is I do what's called a positive net balance, where you have people saying up and people saying down, and you subtract the downs from the ups, and is it a positive or negative? And so in BC, when we ask about, hey, how's your cash? How's your liquidity? Is it more? Is it less? It's a net negative of 20%.
Wow.
Ontario is also net negative, but Alberta is good and Quebec is good. But cash is looking okay in BC. I'm sorry, cash is looking okay in Alberta, and the cash is looking okay in Quebec. But there's a cash squeeze, it looks like, especially in BC.
Yeah. Well, and that's reflective of some of the comments you made on the economic outlook and the confidence, too, of those regions. Dr. Anderson, we're pushing up almost to the end here. I've got one final question for you that we'll try and knock out right before we close out our session for today. And of course, I see there's a few more questions that we didn't get to today. We will take those offline, and Dr. Anderson will provide some thoughts on those as well. But I think it's the manufacturing question, Dr. Anderson. You touched on that. That's a really notable slump that Canada's experiencing. So what do you see as being the thing that needs to change in order to get Canada's manufacturing back on track?
That is a great question. And we don't really get it back on track by devaluing the Canadian currency. That is a Band-Aid approach. And I think we get it back by adopting a more business-friendly situation. And I think we get it back by hopefully, the forecasts for the United States are too pessimistic. People get their emotions connected with politics, and they let their emotions get into their judgment. You have economist after economist saying that the U.S. economy is going to be in trouble because of Donald Trump. I hope it's not. And if there is any success in the United States, I hope that Canada can connect with that. And to me, that means offering opportunity and a business-friendly environment, and changing the parameters of government leadership in terms of what is important. How do you help people? I think you help people by giving them jobs. And manufacturing is central, because manufacturing creates so many jobs in other industries. So that would be, and again, I'm getting a bit into politics here, but I think we need a more manufacturing-friendly, business-friendly landscape in Canada. Let's hope we get it, Cole.
Yes. Well, I'd say that's a great note to end on, and a hopeful note at that. So we are at the end of our time today. I want to take a minute to truly thank you, Dr. Anderson. Your insights today, they really were invaluable as tech members especially as tech members look to navigate, this unpredictable economic climate that, we continue to find ourselves in. I'd also like to thank our attending members and chairs. I do acknowledge we're running a couple minutes overtime here, but really appreciate you all joining us today. And of course, by participating in the survey. We do send out the CEO Confidence Index every quarter, so when you guys are able to fill it out and participate, it really means that we can learn more together. So thank you again. Tech Canada, we're almost at 2,000 tech members across Canada now. So, pretty remarkable to see the impact continue to grow. This has been a very interesting and, of course, an informative conversation, as it always is, Dr. Henderson. Thanks again. And thanks to everyone for participating so fully on the session today and for asking your questions. Really that work really helps us and the tech community understand and react to the opportunities and issues facing the Canadian business community. So we look forward to the next CEO Confidence Index. Thank you all and all the best. Thanks again, Dr. Henderson.
Thanks, Colton. All the best. All the best to everybody. Bye for now. See you next time.
See you next time.